Hello, and thank you for joining us at xm.com for this Forex Preview video. I'm Christina Marujos. Joining me today is investment analyst Marios Hadjikyriacos. We'll be looking at data out of the UK. So it's going to be a heavy data week. In the UK, we're expecting inflation and retail sales on Wednesday and Thursday. However, we've seen the pound not responding, let's say, to the latest data and reports. Will this time be different?
Well, let's put it this way. If there was ever a time that the pound will respond to data, this is probably it. We won't have any Brexit news, most probably over the coming days. So next week, we're expecting the new Prime Minister to be announced. It's most probably going to be Boris Johnson. But in the meantime, there's a scarcity or a break from Brexit news. So we could see the attention shift back to the data, especially considering some recent comments from the Bank of England Governor, Mark Carney, who more or less hinted that the bank will move to a more neutral stance overall and they will probably abandon their plans to raise interest rates. So in that respect, we could see this data attract some extra attention this time.
And looking at the pound, it's been at very low levels lately, and given the fact that the threat of a no-deal Brexit appeared again as Boris Johnson vowed to deliver Brexit in October, and I quote, come what may. So what is the broader outlook for the sterling?
In a nutshell, it's not that bright. So you're absolutely correct. We've seen Boris Johnson essentially hint that the UK is coming out of the EU in October, no matter what. And his threat is more credible than, let's say, Theresa May's previous threats for that, because now we've seen the Tories lose a lot of support, a lot of Brexiteer support in opinion polls. So many voters are defecting to the new Brexit party, for example. So that gives an incentive to the next Tory leader to deliver Brexit on time and not delay it again, because if they do, they're going to lose even more support from the people. So we have the threat of a no deal, and economically, we also have the Bank of England shifting to a more dovish tone, both of which are negative for the pound. Now, here is the potential saving grace for the currency. The dollar is, in my opinion, on a weakening path, so we may see the Fed cut rates more than other central banks. It argues for a weaker dollar in the longer term. If we do see the dollar weaken, that could limit any severe losses in the pound, let's say. So there may be a silver lining there.
All right, Marios, thank you for your insights and thank you for joining me today. And thank you for watching us at xm.com.